Question 1. Topic: Legal concepts in title insurance. Forms of ownership. Sarah and Tim jointly purchased a property in Minnesota and explicitly stated in their deed that they will own the property as joint tenants with rights of survivorship. Several years later, Tim passes away. Who will now own the property? A. Sarah will own the entire property alone, since joint tenancy with right of survivorship. B. Passes ownership automatically. B. Tim's heirs will inherit his share of the property as tenancy in common applies after death. C. Sarah and Tim's heirs will own the property together, sharing equal interests. D. Sarah will own a portion and the remaining share will be subject to probate. Answer A. Sarah will own the entire property alone, since joint tenancy with right of survivorship passes ownership automatically. Explanation: in Minnesota, when a property is owned as joint tenants with rights of survivorship, the surviving owner automatically inherits the deceased owner's share upon death. No probate is necessary. If they had owned the property as tenants in common, Tim's heirs would have inherited his share. This is governed by Minnesota law related to property ownership forms and the legal framework surrounding joint tenancy. Question 2. Scenario-based. Topic: Closing procedures and title insurance. Escrow management. Mr. Hernandez is in the process of purchasing a commercial property in Minnesota. He has entered into an escrow agreement with the seller, and the title insurance company is acting as the escrow agent. Before closing, the seller files for bankruptcy. What should the title insurance agent do regarding the escrow funds? A. Immediately release the funds to the seller as per the original agreement. B. Freeze the funds until further legal instructions are provided, as bankruptcy affects contractual obligations. C. Return the escrow funds to Mr. Hernandez since the seller can no longer complete the transaction. D. Disburse a portion of the funds to the seller while keeping a portion in escrow for Mr. Hernandez's protection. Answer B. Freeze the funds until further legal instructions are provided, as bankruptcy affects contractual obligations. Explanation: when a seller files for bankruptcy before closing, the title insurance agent acting as the escrow agent must not disburse funds until the legal implications of the bankruptcy are fully addressed. Bankruptcy may affect the seller's ability to complete the transaction, and the court must approve any transfers of property or funds. By freezing the escrowed funds, the title agent ensures compliance with bankruptcy laws and prevents potential legal disputes. Minnesota law and federal bankruptcy rules apply in this situation, ensuring fiduciary responsibilities are met. Question 3. Topic: Risk management and underwriting. Evaluating title risks. In the process of underwriting a title insurance policy, a title agent discovers a recorded easement allowing a neighboring property owner to cross over the insured property to access a main road. How should the agent proceed? A. Deny the policy because any easement is a title defect. B. Approve the policy without modifications, as easements are common and generally do not affect coverage. C. Include the easement as an exception to the title policy to avoid future claims. D. Remove the easement from the public records and proceed with the policy issuance. Answer: C. Include the easement as an exception to the title policy to avoid future claims. Explanation: when underwriting a title insurance policy, recorded easements must be carefully considered. The correct procedure is to include the easement as an exception to the title policy. This means the title insurance company will not cover any claims arising from the easement. Denying the policy is not necessary, as easements do not automatically make the title unmarketable. However, removing the easement from public records without proper legal justification is not allowed. Minnesota law requires accurate representation of all recorded encumbrances on title, and including it as an exception protects the insurer from potential future claims. Question 4. Topic: Title insurance policies. Policy exclusions and conditions. Which of the following is typically excluded from coverage under a standard title insurance policy? A. Claims arising from forgery in the chain of title. B. Defects or encumbrances disclosed in the public record. C. Claims regarding property zoning violations. D. Losses caused by rights or claims of parties in possession not shown by the public record. Answer: D. Losses caused by rights or claims of parties in possession not shown by the public record. Explanation: standard title insurance policies exclude coverage for rights or claims of parties in possession that are not revealed by the public records, such as tenants or adverse possessors. This is because title insurance generally covers defects that are found in public records, while off-record claims must often be handled separately. Forgery in the chain of title and public record defects are covered risks, and zoning violations are generally excluded, but not for the same reasons as off-record claims. Title insurers are not liable for matters outside public records unless a special endorsement is included. Question 5. Scenario-based topic: Minnesota real estate transfer tax laws. Mr. Thompson is selling his residential property in Minnesota for $400,000. As part of the closing process, the real estate transfer tax must be calculated. The state imposes a transfer tax of $3.30 for each $1,000 of the sales price. How much will Mr. Thompson need to pay for the transfer tax? A. $1,320. B. $1,500. C. $1,320.50. D. $1,312. Answer A. $1,320. Explanation: the Minnesota real estate transfer tax is calculated by multiplying the sales price by the rate of $3.30 per $1,000. The math for this question is transfer T equals 400,000 own 1,000 x 3.3 equals 400 x 3.3 equals 1320. So Mr. Thompson would need to pay $1,320 in transfer tax. Transfer taxes in Minnesota are typically paid at closing, and the rate is established by state law. Question 6. Topic: Legal concepts in title insurance. Adverse possession and prescriptive easements. Under Minnesota law, which of the following is not a requirement to establish adverse possession of property? A. Possession must be open and notorious. B. Possession must be hostile to the interests of the true owner. C. Possession must be continuous for at least 20 years. D. Possession must include an official title transfer from the true owner. Answer D. Possession must include an official title transfer from the true owner. Explanation: adverse possession allows a person to claim ownership of land if they meet certain conditions over a statutory period, which is 15 years in Minnesota, not 20. The requirements are that the possession must be open, notorious, hostile, and continuous, meaning the true owner could have reasonably been aware of the occupation. However, adverse possession does not require an official title transfer from the true owner. Ownership is transferred by operation of law after the statutory period if all conditions are met. Question 7. Topic: Survey and land use issues. Encroachments and boundary line disputes. A land survey reveals that a neighbor's garage encroaches 5 feet into the insured property. Which of the following is the best course of action for the title insurance company? A. Deny the issuance of any policy for the property. B. Issue the policy with an exception for the encroachment. C. Remove the encroachment before issuing the policy. D. Issue the policy without any mention of the encroachment. Answer B. Issue the policy with an exception for the encroachment. Explanation: when a survey reveals an encroachment, the standard practice for title insurance companies is to issue the policy with an exception for the encroachment. This means the title insurer will not cover any claims related to the encroachment, protecting the insurer from future liabilities. Denying the policy or removing the encroachment may not be necessary depending on the severity of the encroachment. Issuing the policy without mentioning the encroachment would expose the insurer to risk. Question 8. Topic: Minnesota title insurance laws and regulations. Fiduciary duties of title insurance agents. Which of the following best describes the fiduciary duty of a title insurance agent in Minnesota? A. Acting solely in the interest of the buyer in the transaction. B. Managing escrow funds with care and in compliance with state regulations. C. Ensuring that all legal documents are drafted by the agent. D. Guaranteeing the market value of the property. Answer B. Managing escrow funds with care and in compliance with state regulations. Explanation: a fiduciary duty refers to the responsibility of acting in the best interest of another party. Title insurance agents in Minnesota have a fiduciary duty to manage escrow funds responsibly, ensuring compliance with state regulations, including accurate disbursement and safeguarding funds. They do not exclusively represent the buyer or seller, nor do they guarantee market value. Legal document drafting is usually performed by attorneys, not title insurance agents, unless the agent is also licensed to practice law. Question 9. Scenario-based. Topic: Risk management and underwriting. Identifying and evaluating title risks. MS. Patel is purchasing a home in Minnesota. During the title search, the title agent discovers a previously unrecorded easement that grants a utility company the right to lay underground cables across the property. What action should the title agent take? A. Deny the issuance of the policy due to the unrecorded easement. B. Disregard the easement since it is unrecorded and unknown to the buyer. C. Include the easement in the exceptions to the title insurance policy. D. Issue a policy with full coverage for the unrecorded easement. Answer. C. Include the easement in the exceptions to the title insurance policy. Explanation. When an unrecorded easement is discovered, the title insurance agent should include it in the policy exceptions to avoid covering any claims related to it. The existence of such an easement may not affect the insurability of the title, but the insurer must protect itself from potential future claims. Issuing full coverage or disregarding the easement would expose the insurer to risks, while denying the policy may not be necessary. Including it as an exception is the proper course of action. Question 10. Topic: Title insurance claims and resolution. Subrogation rights of title insurers. In the event of a title insurance claim being paid to a policyholder, which of the following describes the subrogation rights of the title insurer? A. The insurer acquires the right to sue the party responsible for the title defect. B. The insurer takes full ownership of the insured property. C. The policyholder must refund the claim amount to the insurer. D. The insurer must immediately cancel the policy and refund all premiums paid. Answer A. The insurer acquires the right to sue the party responsible for the title defect. Explanation. Subrogation refers to the right of the insurer to step into the shoes of the insured after a claim has been paid. The insurer then has the right to pursue legal action against the party responsible for the title defect in order to recover the loss. The insurer does not take ownership of the property or cancel the policy. Subrogation is a common practice in title insurance claims resolution, ensuring that the responsible party bears the ultimate liability. Question 11. Topic: Minnesota property laws. Homestead exemptions. Which of the following statements is true regarding the homestead exemption in Minnesota? A. The homestead exemption applies only to primary residences valued below $100,000. B. The homestead exemption allows homeowners to shield up to $390,000 of home equity from creditors. C. The homestead exemption applies only if the homeowner has no mortgage on the property. D. The homestead exemption does not apply to married couples in Minnesota. Answer. B. The homestead exemption allows homeowners to shield up to $390,000 of home equity from creditors. Explanation. Minnesota law allows homeowners to protect up to $390,000 of their home equity from creditors through the homestead exemption. This exemption applies to primary residences and can be higher, $975,000, if the property is used as an agricultural homestead. The exemption applies regardless of whether the homeowner has a mortgage, and it is available to married couples as well as single individuals. Question 12. Topic: Title insurance and defects in title. Liens and encumbrances. A property buyer discovers after closing that there is a tax lien recorded against the property which was not revealed in the title search. What is the most likely course of action for the title insurance company? A. Deny the claim and hold the buyer responsible for resolving the lien. B. Pay the lien amount and pursue reimbursement from the seller. C. Cancel the title insurance policy and refund the buyer's premiums. D. Require the buyer to take legal action against the seller. Answer. B. Pay the lien amount and pursue reimbursement from the seller. Explanation. If a tax lien is found after the closing and was not revealed during the title search, the title insurance company would likely pay the lien to clear the defect in the title and then pursue reimbursement from the seller or the party responsible for the lien. Title insurance protects the buyer from undisclosed liens or encumbrances that affect ownership, so the company is obligated to resolve the issue. Question 13. Topic: Survey and land description. Metes and bounds system. In the metes and bounds system of land description, what does the term metes refer to? A. Boundaries defined by natural landmarks. B. Annular measurements along property lines. C. The measurement of land using GPS coordinates. D. The distance between two specific points on the land. Answer. D. The distance between two specific points on the land. Explanation. In the metes and bounds system, metes refers to the distance between 2 points, usually measured in feet, chains, or other units. Bounds refers to the boundaries or directions between those points. This system often uses natural landmarks or monuments as reference points and is commonly used in irregularly shaped plots of land. Question 14. Topic: Title insurance coverage. Types of policies. Which of the following types of title insurance policies primarily benefits the lender in a real estate transaction? A. Owner's policy. B. Lender's policy. C. Leasehold policy. D. Extended coverage policy. Answer. B. Lender's policy. Explanation. A lender's policy protects the lender's interest in the property, ensuring that the loan is secured by a clear title. It covers the lender up to the amount of the mortgage but does not protect the owner's equity in the property. The owner's policy, in contrast, protects the property owner. Leasehold and extended coverage policies have specific applications but are not typically issued solely for the lender's benefit. Question 15. Topic: Minnesota property transfer. Deeds in Minnesota. A warranty deed guarantees which of the following: A. That the property is free of all defects, including zoning issues. B. That the seller has the legal right to transfer the title and that the title is free of encumbrances. C. That the property's value will increase over time. D. That no other person has a claim to the property based on prior inheritance laws. Answer: B. That the seller has the legal right to transfer the title and that the title is free of encumbrances. Explanation: a warranty deed provides the strongest protection for the buyer because it guarantees that the seller has clear ownership of the property and the legal right to transfer it. It also assures the buyer that the property is free of encumbrances or defects except those specifically noted in the deed. Zoning issues and future property values are not guaranteed under a warranty deed. Question 16. Scenario-based. Topic: easements and encroachments. A homeowner in Minnesota discovers that their neighbor's fence encroaches 3 feet onto their property. The homeowner is concerned about their property rights. What is the most appropriate first step? The homeowner should take A. File a lawsuit to have the fence removed. B. Offer to purchase the land where the encroachment occurs. C. Contact the neighbor to discuss resolving the encroachment amicably. D. Remove the fence without notifying the neighbor. Answer: C. Contact the neighbor to discuss resolving the encroachment amicably. Explanation: the best initial step in resolving an encroachment issue is to contact the neighbor and discuss the situation amicably. Many encroachments can be resolved through negotiation or a boundary agreement. Filing a lawsuit should be a last resort if no agreement can be reached. Removing the fence without the neighbor's knowledge or consent could lead to further legal disputes. Question 17. Topic: Minnesota real estate license law. Continuing education requirements. In Minnesota, how many hours of continuing education must real estate licensees complete each license renewal cycle? A. 10 hours. B. 15 hours. C. 30 hours. D. 45 hours. Answer: C. 30 hours. Explanation: Minnesota requires real estate licensees to complete 30 hours of continuing education every 2 years to maintain their license. This includes mandatory topics such as fair housing and agency law, and ensures that real estate professionals remain up to date with changes in the law and best practices in the industry. Question 18. Topic: Minnesota contract law. Valid contracts. Which of the following is NOT? A necessary element for a valid real estate contract in Minnesota. A. Consideration. B. Mutual consent. C. A written agreement. D. A notary's signature. Answer: D. A notary's signature. Explanation: a notary's signature is not required for a valid real estate contract in Minnesota. The essential elements of a valid contract are an offer, acceptance, consideration, something of value exchanged, mutual consent, and a written agreement. As required by the statute of frauds, notarization may be required for certain documents such as deeds, but not for the contract itself. Question 19. Topic: zoning and land use laws. A property owner in Minnesota wants to build a small accessory dwelling unit in their backyard. Which of the following factors is most likely to affect whether they can do so? A. The current zoning of their property. B. The amount of time they have owned the property. C. The size of their primary residence. D. The number of occupants in the neighborhood. Answer: A. The current zoning of their property. Explanation: zoning laws determine what types of structures can be built on a property, including accessory dwelling units (ADUs). The property owner must check the local zoning regulations to see if ADUs are allowed in their zoning district and if any specific requirements apply. Ownership duration, primary residence size, or neighborhood occupancy rates typically do not directly affect the ability to build an ADU. Question 20. Topic: Minnesota foreclosure laws. Judicial and non-judicial foreclosures. In Minnesota, what is the minimum redemption period following a foreclosure sale? A. 30 days. B. 90 days. C. 6 months. D. 1 year. Answer: C. 6 months. Explanation: Minnesota law provides a redemption period of 6 months after a foreclosure sale, during which the borrower can redeem the property by paying the full amount owed, including fees and interest. In some cases, such as for abandoned properties, the redemption period may be reduced to 5 weeks, but the standard period is 6 months. Question 21. Topic: Minnesota real estate licensing. Broker versus salesperson requirements. Which of the following is a requirement for obtaining a broker's license in Minnesota, but not a requirement for a salesperson's license. A, completion of a pre-licensing education course. B, passing a licensing examination. C, having at least 3 years of real estate sales experience. D, submitting a background check. Answer: C. Having at least 3 years of real estate sales experience. Explanation: in Minnesota, a broker's license requires applicants to have at least 3 years of licensed real estate sales experience within the past 5 years. This requirement is specific to brokers and not required for salespersons. Both salespersons and brokers must complete pre-licensing education, pass the licensing exam, and submit to a background check. Question 22. Topic: Minnesota real estate law. Agency relationships. In Minnesota, a real estate agent representing both the buyer and seller in the same transaction must do which of the following? A. Avoid discussing any offers with either party. B. Disclose the dual agency relationship and obtain written consent from both parties. C. Refuse to provide advice or assistance to either party. D. Only represent the seller and have the buyer seek their own agent. Answer: B. Disclose the dual agency relationship and obtain written consent from both parties. Explanation: in Minnesota, dual agency, where a single agent represents both buyer and seller, is permitted, but the agent must disclose the dual agency to both parties and obtain their written consent. The agent must also be careful to remain neutral and not disclose confidential information from either side without permission. Question 23. Topic: Minnesota property taxes. Assessment process. Which of the following factors is most commonly used by Minnesota assessors to determine the value of a property for tax purposes? A. The purchase price of the property. B. The property's current market value. C. The number of years the owner has lived in the property. D. The property owner's income. Answer: B. The property's current market value. Explanation: in Minnesota, property taxes are typically based on the property's current market value, which is determined by a local assessor. The assessor evaluates various factors such as recent sales of comparable properties, the condition of the property, and any improvements made. The purchase price or owner's income does not directly influence the property's assessed value for tax purposes. Question 24. Topic: Eminent domain. Government powers. Eminent domain allows the government to take private property for public use, but the property owner is entitled to which of the following? A. Fair market value compensation for the property. B. The right to veto the government's decision. C. Full ownership of a similar property elsewhere. D. Tax relief for the loss of the property. Answer: A. Fair market value compensation for the property. Explanation: under eminent domain laws, the government can take private property for public use, such as building roads or schools. However, the property owner is entitled to fair market value compensation, ensuring they receive the equivalent value of their property at the time of the taking. Property owners cannot veto the decision but may challenge the valuation in court. Question 25. Topic: Minnesota real estate practice. Escrow accounts. In Minnesota, how must a real estate broker handle earnest money deposits received in connection with a transaction? A. Deposit them in the broker's business operating account. B. Hold them in a personal bank account. C. Deposit them in a trust or escrow account. D. Transfer them to the seller immediately. Answer: C. Deposit them in a trust or escrow account. Explanation: Minnesota law requires real estate brokers to deposit earnest money received from clients into a designated trust or escrow account. These funds must be kept separate from the broker's personal or business accounts and are held until the transaction is completed or the parties reach another agreement regarding the disposition of the funds. Question 26. Topic: Adverse possession. Property ownership. For an individual to claim adverse possession of a property in Minnesota, how long must they occupy the property continuously and openly? A. 5 years. B. 10 years. C. 15 years. D. 20 years. Answer: B. 15 years. Explanation: in Minnesota, a person can claim ownership of a property through adverse possession if they continuously and openly occupy the property for 15 years without the permission of the legal owner. The occupation must be actual, open, notorious, exclusive, hostile, and continuous throughout the statutory period. Question 27. Topic: Minnesota environmental law. Wetlands. If a Minnesota property includes wetlands, what must the property owner do before beginning any development or construction on that land? A. File a lawsuit to obtain permission from the local government. B. Apply for a wetland replacement plan or obtain a permit. C. Ignore the wetlands and proceed with construction. D. Submit the property for environmental reclassification. Answer: B. Apply for a wetland replacement plan or obtain a permit. Explanation: Minnesota's Wetland Conservation Law requires property owners to avoid or minimize impacts to wetlands. If development is planned in an area containing wetlands, the property owner must apply for a wetland replacement plan or obtain a permit to legally alter or disturb the wetland area. The goal is to replace lost wetland functions elsewhere if unavoidable. Question 20. Topic: Minnesota zoning and land use. Variances. Which of the following is required for a property owner to obtain a variance from local zoning laws in Minnesota? A. Prove that the property was improperly zoned. B. Show that compliance with the zoning law would cause undue hardship. C. Obtain permission from all neighboring property owners. D. File a lawsuit against the local zoning authority. Answer: B. Show that compliance with the zoning law would cause undue hardship. Explanation: To obtain a variance in Minnesota, a property owner must demonstrate that strict compliance with the zoning ordinance would cause undue hardship or practical difficulties. Variances are typically granted when the land's unique characteristics make it difficult or impossible to comply with zoning regulations, and granting the variance will not alter the essential character of the area. Question 29. Topic: Minnesota tenancy laws. Lease termination. Under Minnesota law, how much notice must a landlord give to a month-to-month tenant before terminating the tenancy without cause? A. 7 days, B. 14 days, C. 30 days, D. 60 days. Answer: C. 30 days. Explanation: In Minnesota, a landlord must provide at least 30 days notice to a month-to-month tenant before terminating the tenancy without cause. This notice period allows the tenant enough time to find alternative housing. However, if the tenant violates the lease agreement, the landlord may be able to terminate the lease with a shorter notice period, depending on the situation. Question 30. Topic: Minnesota real estate. Seller disclosures. Which of the following is required to be disclosed by a seller in a Minnesota real estate transaction? A. The presence of lead-based paint in the home. B. The seller's personal financial situation. C. The current market value of the property. D. Any recent changes in local zoning laws. Answer: A. The presence of lead-based paint in the home. Explanation: Federal law requires sellers of homes built before 1978 to disclose the presence of lead-based paint to potential buyers. In addition, Minnesota law requires sellers to disclose known material facts about the property, including environmental hazards, such as lead-based paint, that could affect the buyer's health or safety. The seller's financial situation and recent zoning changes are not required disclosures.